What's up, guys? Welcome back to a new video, and in this video I'm going to talk about backtesting tips because I've gotten a lot of questions about backtesting, how to approach it, and those type of things. So stay tuned for this and let's get started with today's video. Right, so if you are familiar with my way of trading, it's really mechanical and it's really based around statistics. Now, how do I get those statistics? By backtesting. And in my opinion, backtesting is key in trading. And the reason being is that you want to know if the way you're trading has worked in the past, because a lot of people just learn a strategy from someone or some concepts, and then they start trading it and they don't even know if it has worked in the past. And how are you going to expect it to all of a sudden work for you? That doesn't make any sense to me. And also the guy you learned it from doesn't tell you if he's profitable. Well, he tells you he's profitable, but he doesn't show you. So that's very important. Backtesting shows you if what you are going to do, how you're going to trade, if that has worked in the past. And of course, people always say past performance doesn't guarantee future performance. That is true, but it does give you a guideline if about if what you're doing has worked and if it can potentially work in the future. So the goal of backtesting is simple: determine if there is an edge and how that edge plays out, how it works. And the second thing is building confidence, because if you know something has worked in the past and you know how it has worked, when it works, how often it works, and why it works, it really gives you the confidence to stick to your trading strategy. And everyone is going to go through some drawdowns. You're going to lose 5-10 trades in a row. That's possible for everyone. I don't care how good you are, it will happen. And the way to become profitable is to trade through these drawdowns and to stick to the plan. And you need a lot of confidence in your strategy to go through these serious drawdowns. And that's why backtesting is also very important. It really helps you to develop that confidence. So if we dive a bit deeper into the concept of backtesting, I already explained why you need to test. So first of all, to determine if there's an edge in what you're doing, or at least there has been an edge. And the next thing is to build confidence. What you want to test is, first of all, you want to learn different concepts from people that you understand, and you want to learn concepts that you really, really like. For example, do you like a false breakout? I like that. I personally like that concept because of the idea behind it. It basically means that people that traded the breakout are trapped. Liquidity is being absorbed by a bigger player at those areas of a false breakout. And I want to join the bigger player because he is usually right. He makes the money, not the weak hands that get stopped out. So I like that idea behind it. That's why I use that concept in my trading. But what about you? What concepts do you like? Maybe you like indicators, or any type of other concept. So if you are going to backtest, it's really important to use concepts you like and understand, and then you build rules around those concepts. So I trade fully mechanical, so that's way easier to test the strategy for me. But as soon as you have some concepts, it's time to build rules that you can test in an objective manner, because that's very important. You really want to be as objective as possible. Otherwise, the results will be meaningless. And I've made that mistake in the past, in the beginning of my trading career, that I started backtesting with something that was completely discretionary, and basically using a lot of hindsight analysis. And these results are just completely meaningless. So get clear rules that you can test, and that's very important. Next thing you want to do is gather data when you're testing. You want to know how often the setup or the strategy has worked in the past. So you want to know the win rate. You want to know how many setups you get on average per year. You want to know the average risk to reward ratio. You want to know different targets. You want to test a lot of things. And at the end of this video, I'm going to give you a link to a free course that tells you everything you need to know to build your own system. So stay tuned for that. But it's very important that you get a data and that your sample size is big enough, because 10, 20 trades, backtesting 10, 20 trades isn't enough. That just shows you the last 20 trades. But what about the last 100 trades or 200 trades? Those results can be completely different. And drawing conclusions from just 10 or 20 trades is a big mistake. Again, been there in the past. When I was journaling, I had 20 trades and I noticed a pattern that would increase my trading. So I adjusted my way of trading. Lo and behold, I started making less money because of that. So I started testing it over a bigger sample size. And then I noticed that only the last 20 trades had made a huge difference. But if I go back 100, 200 trades, it didn't make a difference at all. And it in fact costs me money. So when you are going to backtest, at least go for 100 trades and also go for a time span of around 5-6 years of data. So let's say you day trade, you definitely also want to go back a few years at least to get some reliable data, because if something has worked for the last 20 trades, that doesn't mean it had an edge over the past 100 trades. So you basically want to rule out the outliers by increasing your sample size when testing something. And that's a big mistake people make, but it takes a lot of time to get a big enough sample size for reliable data, but it is worth it. It's really worth it. I have so many statistics. I've backtested so much, but now I really have a lot of confidence in my trading. I don't get emotional at all. The only time I get emotional is if I miss a trade, and I don't even care if it's a winner or a loser. If I miss a trade, that's when something triggers in me. But if I lose money 10 trades in a row, I don't care at all. And that's because I've tested, and I've built a lot of confidence in my trading. And that should be the aim. So to get back to that free course, for those of you that have been following me, you know I did a series with the proprietary trading firm BluFX. And we basically did a 6-episode series about how to build a system from scratch. So we start with the lesson 1 about concepts, why you need to test, then about how to build rules. So basically way more in depth in this video. And then we go over how you can backtest your system step by step. So that's also very important. And then we tell you about how to journal, how to keep improving. So basically a free course from A to Z, how you can build your own system from scratch. And if you're interested in that, there's a link down in the description box below this video. And there you can get access to the free course. And I think it's really, really helpful. It has been viewed a lot. A lot of people have commented to me that it's really a great series. So you can go there, and if you have any questions when you watch that series, you can just contact me. Again, description down below, you find my details, or you can leave a comment on one of those videos. We will see it and we will help you out. So that's also something we can do for you. So yeah, head over to that free course right now. If you enjoyed this video, this little recap about how to backtest, a small insight in my approach to it, please leave a comment down below, like, subscribe, more is coming soon, and check out the free course. And then I'll speak to you guys in the next video.